wee hours, right after markets closed, we tracked that story, but very, very briefly. I want to begin by understanding, for the benefit of our viewers, what does the demerger really mean for ITC business? Overall, I am assuming market was expecting a full demerger, but that hasn't really happened. The parent company will continue to hold 40% stake in ITC Hotels.
That's right, Shweta. So whether that 40% will be held completely by the parent company or would then be offset again in the market is something that that is yet to be seen. But what I understand is that unlike Reliance, when it delisted the Jio Financial Services business and promised a 1:1 share allocation, which meant for every single share of Reliance Industries held by the shareholder, there would be an equal 1 share allocated in the new entity of Jio Financial Services. That ratio has now moved to 0.6, which means for every 1 share owned by a shareholder in ITC, once the demerger is through, will be so the share allocation will be 0.6 or 60%. So for every 1 share you own in ITC, you will own 0.6% of a share in the demerged hotels entity. But having said that, right now, if you look at how this demerger is specifically panning out, the percentage of revenue when it comes to ITC is just about 4% on the hotel side. The rest of the pie, and let's bring up those pie charts on the screens first up. If you look at the pie chart, you'll see that 33% of the ITC revenue actually comes from the cigarettes business. 26% comes from the FMCG business minus cigarettes. Move on to the next bucket, which is the agri business. That commands about 25% of the revenue, followed by paperboards and packaging, which is 12% of the business, and just 4% is actually held by the hotels business. So hotels business contributing only 4% to the ITC overall revenue pie, and that suggests to a lot of stakeholders that if it's just a 4% business, is there any need to demerge it? It's not a large contributor to the business. So by demerging it, what value are you actually trying to unlock? Remember, in the case of JFS, there was a great deal of excitement when Jio Financial Services was slated to be demerged, because it was going to be the 5th largest financial services company. The value that it was sought to command from the market, it over exceeded that when the price discovery actually happened. In the case of hotels on ITC, shareholders are not very confident of what value unlocking is Sanjeev Puri and the management team of ITC hoping to do because of its small contribution to the overall business pie. But coming back to what this demerger is going to mean for shareholders, number one, the proposal is out yet, but it still awaits the approval of the board, and the new amendment or the new plan scheme is going to be proposed to the board of ITC on the 14th of August, and that is when a decision on this demerger will eventually be made. Any fine-tuning to the share allocation of 1:0.6 could be up for debate in that presentation, or could go through as the case may be. And broadly, I think what Sanjeev Puri is trying to say here is that he's trying to unlock the value of the hotels business separately.
So, particularly hotels business, because we are in a post-pandemic era where hotels seems to be booming, business is back on track.
Yeah.
Is that what they're referring to when they're saying trying to unlock the value of hotel business? Because as you rightly mentioned, the share of the profit pie for revenue pie for hotel business is not as large as compared to other businesses that ITC is currently operating. Are they going more bullish now with hotels, and with it's once again picking up, and we are seeing there's more travel, there's more air ticket booking, there's more hotel booking. Is that what they're referring to?
So, Shweta, as I see it, and I'll have to dig deeper into the books of ITC to make more sense of what I'm trying to say and corroborate that with numbers. But as I see it, hotels is a capex intensive business. Hotels is a very cyclical business, and the properties that ITC holds are premium hotels. It's not like the Tata Group once invested in Ginger Hotels, which would cater to a larger demand of travelers, both business travelers as well as budget travelers. ITC does not operate on a budget hotels model. It's a capex intensive business. It's very asset heavy. So while the balance sheet of the hotels division would look very healthy because of the sheer size of the assets, if it's not generating enough revenue on a month-on-month, quarter-on-quarter basis, and hence if the cost of operating and maintaining those luxury hotels or premium hotels is much higher than the average revenue that they generate, the P&L is likely to be in the red. And that has a direct impact to bring down the overall value of the ITC share.
Okay.
So ITC minus the hotels business may be able to unlock another value for its shareholders, because other businesses will be able to scale up and grow and capture territories much faster. They will have direct competition. Let's say when you talk about the FMCG business with the likes of HUL and P&G, and perhaps right now the asset heavy but P&L light hotels division in the overall pie of ITC is not letting it compete on share price or even on overall value unlocking with the rest of the FMCG pack. So once hotels is demerged as a separate entity, ITC may be able to take on the likes of HUL and P&G head on head. Right. And hotels then as a separate business will be able to create some sort of a value for themselves and maybe look at expansion, look at attracting new investments, both retail as well as institutional investment, to grow that business separately and not under the umbrella or the aegis of a century-old ITC brand. So it may be able to unlock value for both, but shareholders don't seem at this moment very confident of that value unlock to yield much dividend or much return for them, and that's why we are seeing some sort of a selling pressure in the ITC stock.
The stock is down. Remember, it became the 7th company in India to reach a market cap of 6 trillion rupees. The market cap is just under 5.8 trillion rupees as of this morning. We will of course keep bringing you those details.